Right now, as you watch this, something is happening to your money. You can't see it, you can't hear it, but it's real. Every dollar in your bank account, every paycheck you earn, is slowly losing its power. This isn't a conspiracy. It's mathematics. Since 2020, global governments have injected over $30 trillion into the economy. Money created from nothing, added to the system with the click of a button. The goal? Stability? The result? Something very different. A coffee that cost $3 now costs $5. A home that was $200,000 is now $400,000. A car, groceries, rent, healthcare, everything costs more. It's not because things got better, but because money got weaker. This is the hidden tax, the one no politician announces. The one that silently transfers wealth from savers to debtors. And while most people feel poorer, but don't understand why, those who know history are making a different choice. They're moving their wealth into something governments cannot print. Gold. For 5,000 years, across every civilization, through every empire, gold has been the standard of real value. Not because of tradition, not because of beauty, but because of one simple fact: you cannot create it from nothing. While central banks can add zeros to computer screens, they cannot add ounces to the earth. And that changes everything. There's something the world's most powerful financial institutions don't advertise. While they tell citizens to trust paper currency, they're buying gold at the fastest rate in 50 years. In 2022, central banks purchased 1,136 tons of gold. In 2023, they bought over 1,000 tons more. China's central bank has been adding to its reserves for 18 consecutive months. Russia is stockpiling despite sanctions. India, Turkey, Poland, Singapore all accumulating. Why? Because central banks know that in the final moment of crisis, gold is the only universally accepted payment. No counterparty risk. No government guarantee needed. No trust required. Gold is trust made physical. On August 15, 1971, President Nixon ended the gold standard. The dollar, once backed by gold, became backed by a promise. The promise that the government would manage it responsibly. For 50 years, that system mostly worked. But cracks are showing. The U.S. national debt is $34 trillion. Global debt is over $300 trillion. Money printing is accelerating. When debt becomes unpayable, when currencies lose credibility, gold becomes more than an investment, becomes survival. In 2000, gold was $279 per ounce. By 2011, it reached $1,900. In 2024, it crossed $2,400. But here's what most people miss. This isn't just about price going up. It's about currency going down. Gold isn't getting more valuable. Money is getting less valuable. And the wealthy know this. While headlines talk about stocks and crypto, the ultra-rich quietly allocate 10 to 15% of their portfolios into physical gold. Not for quick profit, but for permanent security. Let's talk about the metal almost everyone ignores. Silver. Most people think of it as cheap gold, something for jewelry or coins. They're wrong. Silver is the most critical industrial metal on Earth. Every smartphone has it. Every solar panel needs it. Every electric vehicle requires it. Medical technology depends on it. Silver conducts electricity better than any other element. It reflects light more efficiently than any metal. And here's the problem. We're running out. Like gold, which is mostly stored and recycled, silver gets consumed. Once it's used in a solar panel or circuit board, it's gone forever. The amounts are too small to recover. For decades, we mined more silver than we used. Not anymore. Today, industrial demand exceeds mining supply. Deficit is being filled by above-ground stockpiles, but those stockpiles are shrinking. Some estimates suggest that at current consumption rates, we could face a severe silver shortage within 10 years. And then, governments made it worse. Climate policies around the world are mandating solar energy expansion, electric vehicle adoption, and green technology manufacturing. Every single one requires massive amounts of silver. The International Energy Agency projects that silver demand for solar panels alone will triple by 2030, but mining production is flat or declining. Simple economics, demand rising, supply falling. The price must respond. There's a ratio traders watch: the gold to silver ratio. It measures how many ounces of silver equal 1 ounce of gold. Historically, that ratio averages around 60 to 1. In 2020, it hit 125 to 1. Today, it's around 90 to 1. This means silver is undervalued relative to gold. When that ratio corrects, silver doesn't just rise, it explodes. In 2010 to 2011, silver went from $17 to $48 in less than a year. A 180% gain while gold rose 70%. History suggests it could happen again. But here's where it gets strange. There are two different silver markets. The paper market, where contracts are traded electronically, and the physical market, where real metal changes hands. There's estimated to be 100 times more paper silver traded than actual physical silver in existence. How? Through derivatives, futures contracts, and ETFs that don't hold the metal they claim. Most traders never take delivery, but occasionally someone wants the real thing. And that's when the system breaks. In March 2020, as the pandemic hit, silver's paper price crashed to $12 an ounce. But try buying physical silver at that price. It's impossible. Coin dealers were sold out. Premiums hit 50% or more. This disconnect revealed the truth. Paper contracts can be created infinitely. Physical metal cannot. When trust breaks down, the paper market becomes irrelevant. The question isn't whether another crisis will come. It's when it does. Will you be holding paper promises or real assets? There's a number most people ignore. $34 trillion. That's America's national debt. The interest payments alone are now over $1 trillion per year, more than the defense budget. And it's accelerating. But America isn't alone. Japan's debt is 264% of GDP. China's total debt is over 300%. The entire global financial system is built on one assumption. Debt will never have to be paid back, only refinanced. This works until it doesn't. History shows us what happens next. Weimar Germany, 1923. Zimbabwe, 2008. Venezuela, recent years. These were functioning economies until debt and money printing crossed a line. The pattern is always the same. Government overspends. The central bank prints money. Currency collapses, and wealth vanishes, except for those who held gold and silver. For 80 years, the US dollar has ruled the world. But that era is ending. The BRICS nations are building alternative payment systems, reducing dollar reserves and increasing gold reserves. They see what's coming. This doesn't mean the dollar will disappear tomorrow, but its dominance is declining. And when the world's reserve currency weakens, everything priced in that currency becomes more expensive, including gold and silver. Now governments are proposing central bank digital currencies, sold as convenience. But look closer. Digital currency is programmable money. Money that can expire if not spent, be restricted to certain purchases, or be frozen instantly. Imagine a world where every purchase is tracked and every financial decision requires approval. In that world, physical gold and silver become something more than investments. They become freedom. Because a gold coin in your hand, no government can track it, no algorithm can control it. It's yours, completely. Now imagine all of these forces converging. Unsustainable debt, currency devaluation, digital financial control, de-dollarization, a silver supply shortage, rising geopolitical tension. Together they create the conditions for a monetary reset. A moment when the old system breaks and something new emerges. This has happened before. And each time, those who prepared, prospered. Those who didn't, lost everything. Analysts are divided on the timing, but almost all agree on one thing. The current system is unsustainable. So what does this mean for you? Throughout history, the wisest approach has been balance. Financial experts often recommend 5 to 15% of wealth in physical precious metals. Not for profit or speculation, but for insurance. Insurance against currency devaluation, system failure, and digital control. Gold is the anchor of stability. Silver is the growth potential. This isn't about being rich or poor. Anyone can start. The question is awareness. Do you see what's happening? Are you willing to prepare? 6,000 years ago, in ancient Mesopotamia, silver was money. 5,000 years ago in Egypt, gold was wealth. Empires rose and fell. Currencies died. Their paper promises turned to dust. But gold is still valuable. silver is still essential. Today, we stand at another crossroads. No one can predict exactly what happens next, but we can learn from what has always happened before. When systems fail, when currencies collapse, humanity returns to real value. 2 gold, 2 silver. Storm may be coming, or it may already be here. Either way, the question remains, will you be ready? Thanks for watching.